Right, so today we'll be focusing on triggers, meaning the entry criteria. And the reason why I'm focusing on this is because this is the way you get a low risk entry, and we're going to discuss how to do the entry. But first things first, the reason why I'm discussing this is because there's a lot of different entry criteria, and a lot of them also are delayed, and they mess up the risk reward. So for example, when we discuss entry criteria, you might have a MA cross or indicator cross or indicator, red or green indicator, right? Then there are more sophisticated methods like order flow. Or there may be some pattern or something like that, right? But the way we do it is a little bit different. It's based on the bar, meaning the candle or the bar, but it's based on the bar expressing demand or supply. And I'll show how this is done. All right. And other methods, especially indicator, whatever these are, they mess up they're just too much risk. Because of the lag. Why? Because anytime you use averages, there's a lag. All right, that by its definition, the average will always lag because it sums up a number of periods, a number of bars, so it'll always lag. All right. So we'll discuss this. But before we do that, the second thing you have to know is that it's basically a demand or supply bar. But where do these bars occur? All right, so if you have a wave chart or you put a zigzag on your chart, you'll notice that this area here, meaning the pivot reversal, the pivot, and the breakout. So this is 1, 2, and the third area is you have a consolidation. Uh-oh. What the hell am I doing? All right, so when you have a consolidation, so when you have a consolidation, meaning you have a red bar, a green bar, red bar, green bar, and then you have a big red bar, a big green bar. So 1, the pivot reversal, the breakouts or breakdowns, and 3, consolidations. Usually in these 3 scenarios, you have a bigger bar. All right, that bigger bar is an expression of demand or supply. Now we'll consider all 3 of these. Actually, let's just stick with one. The pivot reversal is how you buy a pullback. So you buy a pullback based on the pivot reversal, meaning at this area there should be a big bar. When you have a pivot, it's not just a 3 bar or 2 bar candle pattern, it's the actual height of the bar. So you have a rally, you have a pullback, And before I go any further, the other things to note is that you need to get the trend right already, the trend, then the setup within the trend, and then the trigger within the setup. So this should be understood. Trend, the setup in the trend, and then the trigger within the setup. All right. So it may be like you have a rally with trend on a higher time frame is going up, lower time frame has a rally, and then it has a setup. Maybe it's a break and test, and then you have that trigger, which happens right there with the big green bar. Okay. So again, the trend was the higher time frame going up, rotating up. Setup is this rally, test the breakout, break and test, and the trigger will be right here, right as the setup occurs. So you see that it's all tied together. So now, having said that, and that's just one example of setup. It could also be a spring or an upthrust. Have that. Could also be off of a POC. It could also be other, nodes, etc. So now, having said that, the idea is that we like to buy here. Why? Because it's in most cases you only have one bar of risk, right? If you buy the breakout here, the risk is multiple bars of risk. So why not get in from this bar instead of this bar? Both have a chance of failure. Let's just get that straight. But when you buy here, your risk is reduced. Less risk here, more risk here. Right? All right, now that we understand that, what are the thresholds? From my experience at this area, see, it's like asking what is a big bar, all right? So the bar should meet the threshold of 1.2 times ATR, greater than 1.2 times ATR, and biggest in at least 5 bars. Could be biggest in at least 5 bars or the biggest in at least 5 green bars. Both is fine. Biggest in X bars or X green bars, and the same thing with the red bars would be biggest in 5 red bars or biggest in 5 bars. All right. So now that you understand that this is at least 1.2, meaning 20% greater than the average true range. So ATR, you can use either 10 or 14, doesn't really matter. It has to be 20% bigger and biggest in at least 5 bars or 5 green bars, and from the short side, biggest in 5 bars or 5 red bars. All right, now let's put all the theory to the side and just show you some real examples. All right. Let's take an example of the ES. All right. put this. All right. So, this was a demand coming in. All right, there's a demand coming in. How do I know biggest in 49 bars? Biggest in 49 waves. Biggest in 49 waves. So that's the first step. All right. So you know that we're, there's a setup and it's going up. Now I'm only, because I have a bias of it going up, I only want green bars. I don't want red bars. All right, I only want green bars. I don't want red bars. And preferably when the pullback occurs, I want it to be a weak pullback, or for example, a spring, or some levels. Something that tells me that the pullback is weak. All right. Now this is a demand. Now I'm only going to look at the green bars. Why? Because green bar is buying activity. So you have rally, you have a pullback. Now I see a green bar. That green bar is the biggest in 37 green bars. That's a trigger. Okay, remember, we can buy here on the pullback, or we can buy over here, but this is a bad area to buy, because if I buy here, I have all this risk. But if I buy the pullback, I have basically 1 bar of risk. So do I want to buy breakout, or do I want to buy the pullback reversal? Obviously, I want to buy a pullback reversal. And I know that this is a good area. You know why? Because the price went up here, it absorbed. You see all this up, down, up, down, up, down, green, red, green, red, green, red. It's all absorption. Here is where buyers won, indicated by, again, the green bar there. This is where they won. It took them out and then had a fall through. So now it's just testing that area of that prior green bar, which was the biggest green bar in 12 green bars. Comes back to that area, and they continue to buy. So that's your trigger. Let's say I didn't get this. Where else can I get a green bar that meets the criteria? This doesn't really meet the criteria right here. There's a green bar here, but it's not good. I wouldn't take it. Why? Because it needs to meet at least 2 criteria, which is it's a big green bar, biggest in at least 5, and this is 37. So obviously it meets that criteria. And the second, it has to be at least 1.2 times, above 1.2 times average true range. Above 1.2 times average true range. So here, bingo. Here, not too happy. Here though, here, when it pulls back, doink, right here, is the biggest in 16 bars. So that's a trigger, that's a trigger. Again, that's a trigger, that's a trigger. Why? It's biggest in 16 bars, or 16 green bars. So that's a trigger, right? I'm not. Here's the thing: you cannot give a shit about the red bars when you're in an uptrend. So you only look at the green bars. All right. When it reverses, you'll get your red bars. I'll only be looking at red bars. All right. So right here, you have the green bar. Okay. Now it goes up. Ding, 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 ding. Nothing, nothing, nothing. This is interesting, but it didn't meet some criteria. I don't know what criteria. It didn't meet it. It needs to be bigger than 5, and it met that criteria, but it's not, what is it? It probably doesn't meet the 1.2 times average ATR. But later on, this does. This is biggest in 13 green bars and meets the 1.2 times ATR, bigger than 1.2 times ATR. So that's another trigger. and if you look closely, it went into a spring position. Actually, this went into spring position also. This looks like almost a full test. But anyway, this right here is the spring of the prior low, and can't follow through on the downside and reverses with the biggest in 13 green bars. And blah, blah, blah. You know, it just goes up. Then it pulls back again. You have biggest in 9 bars and makes another higher high until it pukes. Okay? Now, if the market turns, I'm going to start looking for red bars. But with the red bars, you want to look for upthrust because they're more effective. So for example, this high is upthrusted by this high, meaning attempt to break out that fails. Really, the upthrust is just an attempt to break out that fails, and the spring is an attempt to break down that fails. If you want the simplest definition, really practically, without doing all the mumbo jumbo, it's nothing more than breakout and breakdowns that fail, meaning they're false moves to either side. So you have this high, it tries to go up, and what did happen? It reverses. Big red, short. Right? And the same thing goes on. Now you have buying activity. I'm noting this green bar and that green bar. Probably this one too. And it's taking out these highs. So that's what I explained, that you have these big green and red bars at key locations, either at the pivot or on the breakouts or after consolidations. Right here, you have the biggest in 8. Why? Because they're breaking out above these 2 highs. So you see an expansion in the range. This always happens. Even these lows, when they break, they expand. Price expands. So even on the reversal, it expands. Right here, price expands. So if you understand that, you can put the picture together. Anyway, long story short, that's the trigger. The idea of the trigger is really straightforward. And that is that, we want price-based triggers. And after in your plan, once you have your trend set up, you're focusing on the trigger. After the trigger, it's just the execution management of the stop, managing the stop and the target. All right? That's really it. Trend, setup, trigger, and then stop and target management. Right? And the whole thing I showed you is that we want to buy after the pullback, not the breakout, because of the risk. And this is the threshold that you should be looking for. 1.2 has to be greater than 1.2 times ATR and biggest in at least 5 bars or green bars for 5 green bars, or for shorts, 5 red bars. All right, that's all, folks. Take care. Bye.